you live from CNBC TV 18's headquarters in Mumbai. This is Opening Bell with Udayan and Mukherjee.
Good morning. Welcome to Morning Call. It's been a quiet couple of days with the market consolidating around that 5,900 level. Global cues have also turned a bit mixed and flows have just eased off a little bit, but the broader market is still doing well. So we need to see over the next few days if that remains the tone of the market, more consolidation with outperformance from mid-caps and small caps. Mitali, good morning.
Morning, Udayan. And it hasn't been consolidation with a negative bias, to be fair to it. Things have been actually quite range-bound.
No, the screen is still very strong. There's no question about it. But the falls intraday are very, very shallow. I mean, 20, 30 points, and that too almost reluctantly. But it's almost like the Nifty is paying some kind of token kind of respect to the fact that people are calling for consolidation, that it's run up 600 points and therefore it must pause a little bit, but it doesn't seem to be in any kind of mood to correct meaningfully. So I don't know whether we'll get a lot of correction. Yes, as we've been discussing for the last few days, there are some challenges in the environment, but for now the large caps are not taking notice of it, and it seems like we are in a nice trend out here. So we have to see over the next couple of days if the Nifty is telling you that it has to give up a little bit more ground, or it just potters around for a few days here and then takes off again to keep its target of 6,000 plus, as most people are talking about.
News flow is picking up globally though, from the Euro region, the way US markets have been trending.
Yeah, I think the market is too inward focused and flow focused at this point to keep an eye on what's going on around us, but a lot of things on the margin might be changing. I think today almost inevitably we'll get a 25 basis points hike from the ECB. It's difficult to say whether they'll, after doing that, they will still continue to sound hawkish about interest rates going forward. This has implications not just for liquidity flows but also on what happens with the peripheral European markets, which are sort of struggling a little bit. Portugal's asking for a bailout now, and ECB rate hike does not help some of those markets which need capital. Also, the bigger question is, what does the US do in over the next few months? If the European Union holds on to a fairly hawkish kind of stance, will it persevere with QE3? At some point late in the year, will we see interest rates start going up in the West as well, in the US as well? So these are things which people are not trying to react to at this point in time. Neither crude, but flows are strong, and that's pretty much what the market has its eye on. But I think over the next few months, a few things will change globally, and that might require a bit of adjustment on either side. For today, of course, the ECB news is important, and of course what the euro does, which is trading at a 14-month high today.
The Nifty may putter around these levels for a bit, Udayan?
It's done that for the last couple of days, Mitali. So, it's difficult to predict. In markets which have such strong momentum, you could have 2 or 3 days of rest and then the market might take off again if you get a dollop of liquidity. But I think just in the near term, this level of 59.70, 59.60 is something which a lot of traders are watching, because the markets just promised to go there a couple of times and not quite made it. So once that is taken out, you're trading 6,000 plus straight away. So I think psychologically that presents a little bit of a hurdle for the market after the rest of the pause of the last couple of sessions. Conversely, on the way down, you've seen a couple of times the Nifty attempting to get close to that 5850 level, inevitably bouncing back during the course of the day. So everybody now is positioned to buy every small decline in the market. I mean, people are queuing up to buy 5850. So you need to see whether that for any event just does get taken out on the way down, or it sort of holds out as it has over the last couple of days. So just in the near term, within this 100-point kind of range, the market might choose to spend a bit of time, but that's anybody's guess really, because it's in this kind of a market you could just start flying once again. From the last few days, the Nifty seemed to have kept a target of 6,100 and has still not made it there. So it's conceivable that unless some bad news comes in over the next few days, you do get to those kind of levels before this leg of the large cap rally tops out. But this is all guesswork. I think it depends on flows, mood, events, etc. But just for the day or two, I think those are the key levels that you're working with. Is 59.70 taken out on the way up, or conversely the shallow correction of the last couple of days which has stopped at 58.50, whether that holds out for now?
On the internals, does it suggest more range bound action?
It is because the forces are cancelling each other out. I mean, you're getting still 500-600 crores of FI money every day, but the domestic institutions are selling that and netting it out. So net institutional cash commitment to the market is sort of flattish now. You saw 500 crores plus from FIIs and 500 crores minus from domestic yesterday. On the margins, the stocks have been moving fast because stock futures have been adding a lot of open interest, 15 crore shares from the start of the series. But yesterday was only about 69 lakh shares. So I think that has also ebbed off a little bit because stock prices have moved up quite a bit. So even on stock futures, I think the momentum just on the evidence of yesterday has abated a little bit. I mean, that means nothing. You could have another strong day of flows and suddenly futures will add 4 crore shares, and then everything will start moving once again. So it's an unpredictable market at this point. I think finely balanced. The risks have risen with stock prices, but momentum is still not given up. As you saw for the last couple of days, corrections have only been intraday.
The mood has lifted though in India for a lot of global brokerages. I mean, at least that move from underweight to neutral is now happening on us.
That's the money talking. I remember you were asking me, Mithali, a few weeks back how the markets will move up given that there are so many people who've got underweight stances on India. And now the market has rallied 12% and then a lot of overweight stances are coming in. It reminds you of the old maxim in the market that opinions do not make markets, it's markets which make opinions. And I think this is a classic case of that. It happens all the time. I mean, how many instances have you seen of a stock falling 20% and then sell reports coming out on that stock? I think it's the stock price which and the mood which tends to turn people around rather than fundamentals quite so quickly. And then post facto fundamentals are retrofitted to justify some kind of price action. I think these people are brokers and they know what the mood is and they tailor their advice to suit what the current mood is. So 3 weeks back, I mean, with crude at $110, everybody would have been very bearish on India, saying no, crude is a big problem, so you need to be underweight on this market. Now that was 5,300. Now it's 5,900. $2 billion have come in. Crude is at 122. Inflation has not died exactly, but now people are finding more reasons to buy India. So I think it's the stock price which has changed and which is leading to some of these overweight calls which are coming in. But the perception is changing, and that's very important. 3 weeks back, the perception on emerging markets was not great, and now that has changed for whatever reason, and you need to take cognizance of that. And I think it is fair to assume that both on the buy and the sell side, the mood on India and emerging markets has changed around quite a bit on hopes that policy action is beginning to open up and a bigger hope that inflation will level out. But for now, I think it is still in the realm of hope.